Enphase Energy, third quarter 2025 earnings call. Hey up everyone, welcome to Martyn Lucas Investor. I'm Vaz. You know what time it is? It's not time to start talking eVTOLs. We'll be talking about Enphase Energy and covering their earnings call. As you can see above me and under me in the video title. Thank you very much for joining me. First of all, do we have any Enphase Energy investors? Let me know in the chat if you are invested in Enphase and what is your average. Because Martyn, and I agree with him, he can see this massive upside. He can see this massive upside of this stock for long term. Currently, it's been facing headwinds, but we will get to that very shortly. Let's have a look quickly. So let me know. Yeah, don't forget to hit the like button. Thank you, Jamie. Don't forget to hit the like button. And let me know in the comments below, in the chat, what is your average if you are invested in Enphase. Don't tell me how much money you have spent buying in Enphase shares, but let me know what is your average. So what is going on today? What has the markets been doing? The S&P slightly up, Nasdaq 0.7 up. We are coming to the closing bell, 10 minutes, and we are going to the closing bell, and we will get the numbers very shortly as well after the closing bell. Bitcoin slightly down, 0.46. I can't see it from here. XRP 0.75% down, percent point. Ethereum is crashing, 2% down. Gold 0.69, and silver slightly up. However, in the longer downtrend, gold has been holding under the $4,000 mark for a while. The S&P reached the all-time high recently. What is the Enphase Energy stock going to do? Well, let's have a look. There's only one way to find out. Well, good news. This earnings call starts about 30 minutes earlier to the others. So we will get the closing bell. We will get the numbers in probably a few minutes after. And then 30 minutes after the closing bell, we should be starting. I've got it already primed up. Got it already primed up for you. Look at this. I've got it ready. It's just music. That's a 15-minute loop. That's just music, but it'll be starting 30 minutes after the closing bell. So what the chart is doing currently, before the closing bell, let me just pause this. It's playing country music at me. You can't hear it. I can't play it for the copyright reasons. So what is the chart doing? Coming to the closing bell, we are around the $37 mark. If we look at the yearly, I do apologize. If we look at the yearly chart, it is very, very cruel to the retail investor. However, it is understandable. If you look at a bigger picture, if you look at the current administration in the United States, if you look at Donald Trump, he doesn't like renewable energy sources. So solar is facing big headwinds. However, this is not going to be forever. Yes, Donald Trump wants to run for his third and fourth mandate, but even if this is not forever, so there will be, if this is a good business, as Martyn says, we will get to the numbers shortly. If this is a good business, as we believe it is, there will be a massive upside. If you look at the volume, what is in our favor? We have slight increase in volume in the recent months compared to the previous. We have been selling off recently. Well, not recently. In August, we hit $30 mark, or we actually touched under the $30 mark. This is the yearly chart. Since we've been going slightly up, but if you look at the downtrend, it's been laddering down. We had this nice trend line all the way down. Now there's no trend. I can't see any trend in there. Maybe Sensei could, but I can't see any trend. We had this little uptrend from the August lows of $30 when I believe most of us started investing in Enphase. So we had this trend. We touched it 1, 2, 3, 4, 5 times, 6 times actually. Then we broke. We went sideways, and now we have a slight sell-off. So we are the bottom. The bottom would be for tonight's earnings call or for the next days. If we have bad numbers, I would be looking out for the $34 mark, and then I would be looking lower for the previous previous $30 resistance. If it goes well, I'm definitely looking. That will be my next target. We have 30, 39, and then there will be the $42 mark. If we break through it, we can see a nice run up. So let me just check. We have 5 minutes to the closing bell. Let's have a look. Let's have a look at the chat. Who we've got here. Thank you very much for joining. Don't forget to hit the like button on your way in or on your way out. We are covering Enphase Energy third quarter earnings call. Will be starting in about 35 minutes. We've got Susan. Susan was here first, and I can't see it. I can't recall it because it's blocked by the poll. We also hold a poll in the chat, as you can see here. So let us know. What do you think? Is Enphase Energy a buy, hold, sell, or are you undecided? Let me hide this. Oh yeah, there she is. So we have Susan. She was here first. Thank you for joining. Jamie Rees, Ninja Cowboy, Luis Fernando, Santos Mora 1000. That's an interesting name. Is that your civil name? Did you guys hear about SunPower? Yeah, I saw your comment in the previous event. Did you guys hear about SunPower and SunPower Enphase deal that involves 200,000 Enphase batteries? It was mentioned in SunPower earnings 5 days ago. Thanks for the information. No doubt, if it's true, if it's such a big deal, I wouldn't be surprised if we hear it on the earnings call. Trixie is here. Thank you very much for joining me. My checkmate, Jamie Rees. Hit the like button. Yeah, I agree. And Anders Nicolaisen, is excited. Good. Anders, what is your average on in Enphase? Jamie Rees, 37.66. Nice. Anders says 37 average. Very good. Sedatories 34.71. Sharpshooter 37.90. I bought onto it late. Ninja Cowboy bought in late too, 36.80. Trixie says Vaz, as we know on Archer before earnings, it should go down, so I'm waiting for the drop. Hope it will happen. Well, we all do. Then I will add more. Are you adding more, Vaz? I'm currently waiting. I'm waiting for Catalyst. I'm not buying any of the eVTOL stocks. I'm waiting for the earnings. I'm waiting for excuse me. I'm waiting for a catalyst with Vertical Aerospace. I'm waiting for more catalyst with Archer. So currently, I'm just sitting on the sides and waiting. We are 2 minutes away from the closing bell, and I will actually ring the bell for you for the first time ever. I will actually ring the bell for you virtually, but I will. Sedatory says high call options for November on Enphase. High volatility predicted for this earnings call. I agree. DJ Hayes, thank you for joining. Henrik is here. Good evening all. And poor man to rich man. Hello, Tony. So, Enphase Energy. Let's have a look what the markets are doing. Before the closing bell, we are about 1.5 minutes away. S&P is slightly going up. Nasdaq around the 0.7% point up today. Bitcoin going slightly down. XRP slightly selling off. Ethereum holding that negative 2% on the day. And gold and silver, not much move on it. So let's have a look at, what was I gonna do? That was the markets. Okay, yeah, Enphase. Sorry, I've lost myself. My girlfriend, she brought me a mug of tea, and I completely lost everything. So we are closing. We are coming to the closing bell. If I zoom into the five day to the 15-minute candles. If I zoom into the 5-day chart, we seem to be going slightly down. That's interesting. Today there was a good run up. There was a sell off and a good run up since. So we are on the previous closing bell levels. Let's see what the closing bell is going to bring. And as you can see, the numbers should come out right after the closing bell. So we will wait for the numbers, read the guidance, and then I will quickly explain what Enphase is doing and what they are about. So the closing bell, the very closing bell is about 20 seconds away now. So bear with us. Let's see what Enphase is doing. Let's just quickly check the overall markets. No massive movement. So let's get back to Enphase. We're about 10 seconds away. 5. And I am ringing the bell for the first time ever on my show. Can you hear it? Please tell me it's coming through. Please tell me it's coming through. Oh yeah, Tony, you've got good point. I don't have Phoenix. I need to get Phoenix, yeah. Well, that's the first step, okay? That was the first step. Okay, you can hear it. Thank you. That's good. Enphase Energy. Slightly under the $37 mark. Let's see when the numbers are out. Did we have any big move on the closing bell? No. S&P 0.20 plus today. Nasdaq 0.63. That's slightly coming down. Bitcoin still the same levels. XRP is level around 0. That's good. Going sideways. Ethereum slightly recovering. Gold and silver, no major move. So Enphase Energy. Enphase Energy. What is Enphase Energy? Enphase Energy is a US clean energy technology company based in Fremont, California. Founded in 2006, it designs and manufactures home energy systems that combine solar, storage, and smart energy management. Their signature product is the microinverter, converting each solar panel's DC output to AC at the panel level, improving efficiency, safety, and monitoring. Enphase has grown into a global leader in residential solar plus storage, active across North America, Europe, and Asia Pacific. Do I remember right that Martyn has got Enphase on his house? Martyn, are you here? Are you with us? Let us know. Do you have Enphase on your house? Do I remember it right? So, product and technology. We have IQ micro inverters. Let me just quickly check the chart because we have some move up. The numbers are not out yet, but we already are having some good push up. Well, let's see. I'll be tracking this for you. Their product and technology. We have IQ micro inverters. Core technology enabling panel level optimization and safety. IQ battery 5P series. Their latest home storage system with faster discharge and improved efficiency. We have Enlighten platform, software for system monitoring and energy management. And the company strategy is to deliver a fully integrated system, solar generation, energy storage, and smart control under one ecosystem. Market position of Enphase Energy. We have a bit of volatility, micro volatility. We are not talking percent points. We are talking 0.76 currently this candle. So we are not. The numbers are not out yet. The numbers should be out in a few minutes. I'm keeping my eye on it. So the market position of Enphase Energy. It is recognized as the world's leading microinverter provider in the residential market. It competes mainly with string inverter manufacturers such as SolarEdge and Huawei. Strong presence in the US and Europe through currently facing soft residential solar demand. We already talked about it. Higher financing costs and tariff headwinds on imported components. Enphase is also reshoring some battery production to the United States to qualify for incentives and mitigate import tariffs. Last quarter, Martyn covered the last quarter's. I'm seeing Trixie is saying that's a bearish candle. Okay, and there we go. So the numbers should be out. Excuse me, I don't know what's going on with my throat. Let's check if we have the numbers out already. I'll bring it on the screen. I can't see the numbers yet. Let me check this website. I think the numbers are out. We have reaction. Let's just have a look at this. Let's go back. I'm checking. No, I still don't see the results out. Still no results. If you look at their website, still no results, just the conference call reference link. No, we have the previous quarter, which I'll be talking about literally now. So the second quarter highlights. What the chart is doing, we have a slight movement down. Nothing happened. So, excuse me, I don't know what's going on today. So second quarter highlights. We have revenue up about 20% year over year, 363.2 million. Gross margin, 48.6%. That's massive. Non-GAAP earnings per share, $0.69. They beat the expectations. Cash equivalents, 1.53 billion. That's massive as well. Growth driven by strong US and European demand. Increased microinverter and battery shipments. Margin strength reflected tight cost control and premium product positioning. What to expect from this quarter? Revenue guidance, 330 to 370 million. Analyst consensus, 369 million revenue and 0.66 EPS, earnings per share. Gross margin forecast, 41 to 44%, down from second quarter due to tariffs and competitive pricing. Demand expected to remain soft in North America, but steady in Europe. Key focus, performance of the IQ battery 5P launch and the US production ramp up. Let's have a look at the chart. The numbers are out. You can see it. Oh, that is a massive long candle. 4, 5, almost 5% down. Okay, well, let's see the numbers. Let's see the numbers. Let me refresh this. That should be out now. Financial results, yes. So financial results, let's have a look. So currently 34.93. Let's have a look what we've got here. Enphase Energy reports financial results for the third quarter 2025. Enphase Energy, a global energy technology company and the world's leading supplier of microinverter-based solar and battery systems, announced today financial results for the third quarter 2025, which included the summary below from its president and CEO, Badri Kotandaraman. Sorry if I read it wrong. We reported quarterly revenue 410.4 million. So it's slightly lower than the consensus in the third quarter, along with 49.2 non-GAAP gross margin. That's good. That's good. That is good. Because we had expected 41 to 44%. We shipped approximately 1.77 million microinverters or 784.6 megawatts DC and record 195 megawatt hours of IQ batteries. Highlights for the third quarter 2025 are listed below, and we can see it's already coming back. It's already coming back. So there was just the overreaction. Let's see what the guidance brings. Let's see what the guidance brings. I would not be buying now. I would be waiting. I'll be waiting for the guidance. You could buy the bottom. It is a risky move, but anytime the numbers are out, you can usually buy the overreaction if you are lucky. If you have your sales and buy orders in. But there's usually only slight few percent up move. You can, if you are clever, and if you are a bit lucky as well with the algorithm and with the buy orders getting filled, you can make easily 1-2% on each earning when there's this overreaction, the initial overreaction. But I don't recommend it. I would not be buying now. It can start coming down. Wait for the guidance. Wait what the company is going to tell us. So the revenue of 410.4 million, highest revenue level in 2 years. GAAP gross margin 47.8 and non-GAAP gross margin 49.2. So it's comparable to the previous quarter, including 4.9% of tariff impact. GAAP operating income of 66.2 million, non-GAAP operating income 123.4 million, GAAP net income 66.6 million, non-GAAP net income 117.3 million. GAAP diluted earnings per share is 0.50. Non-GAAP is 0.90. So we have a beat. Free cash flow 5.9 million. Ending cash equivalent and marketable securities of 1.48 billion. So the financial situation, they are not burning cash. That's good. That's some good news. US manufacturing shipped approximately 1.53 million microinverters and record 67.5 megawatt hours of IQ batteries. IQ meter color approved by 39 US utilities to date. We have revenue here. Comparison. Let me just zoom in so we can read it. We can read it better. Can we see it better? Revenue. Third quarter. We have upside compared to the previous quarter, and we also have an upside compared to the previous quarter of last year. Gross margin is going up. The gross margin is going up. So again, we have some positive news. Operating expenses. Let me check the chart. Operating expenses are up as well. Operating income is up as well. Net income is up compared to the previous quarter, but not compared to... Oh yeah, it is. Sorry, I'm mixing GAAP and non-GAAP. So we are up. We are all metrics are up. Basic earnings per share, again, up. That's good. That's some... Wait for the guidance. Wait for the guidance. We might have a good investment opportunity. Let me know what you think in the live chat. Do we have anything we need to mention? The earnings call is starting in about 18 minutes, so stand by. I've got it ready for you here on the screen. I've got it on standby. Total revenue for the third quarter 25 was 410 million. Martyn is here. Martyn, yes, I agreed. I agree. Great beat. Martyn, do you have Enphase? Did you say you have Enphase on your house? Let us know, please, because I don't remember which one. But yeah, I agree with you. I'm looking at the balance sheet. I'm looking at the beat. It's massive. Look at the cash position. It's not changing at all. It's just slightly 1% down or whatever that was. That's great. So our revenue in the third quarter 2025 included 70.9 million of safe harbor revenue compared to 40.4 million of safe harbor revenue in the second quarter. So again, they are up. Our revenue in the United States for the third quarter 2025 increased approximately 29% compared to the second quarter. The increase in revenue was the result of higher demand and safe harbor revenue. Our revenue in Europe decreased approximately 38% for the third quarter of 2025 compared to the second quarter. The decline was a result of further softening in European demand. Our non-GAAP gross margin was 49.2% in the third quarter compared to 48.6%. So again, we are up in the second quarter. Our non-GAAP gross margin, excluding net benefit from the Inflation Reduction Act, was 38.9% in the third quarter of 2025 compared to 37.2% in the second quarter. The reciprocal tariff had a negative impact of 4.9 percentage points on margins in the third quarter of 2025 compared to approximately 2 percentage points on margin in the second quarter. So we seem to be consolidating just on this slightly lower step down, seem to be consolidating around the $36 mark. Let's wait for the guidance. We are about 16 minutes away from the actual webcast, from the actual call. Let me just quickly go through the, let's see what the markets are doing. S&P is slightly cooling off, as well as Nasdaq. Bitcoin is down 1%. XRP down 0.5%. Ethereum keeps selling off. We are now 2.6% intraday. And gold and silver cooling off as well. So let's see what the guidance is going to be. But again, as Martyn said, this is great. These are some great numbers. Let me just quickly go through the guidance, or if we have anything that is worthwhile to mention. You can also pause this. Can I put this all in the screen? You can pause this, zoom in. If you pinch in with your fingers, you can zoom your screen in when you are watching on your phone. We exited the third quarter. Yeah, we exited the third quarter of 2025 with 1.48 billion in cash equivalents, and marketable securities, and generated 13.9 million in cash flow from operations in the third quarter of 2025. Our capital expenditures were 8 million in the third quarter compared to 8.2 million in the second quarter. In the third quarter of 2025, as part of our anti-dilution plan, we spent approximately 1.7 million by withholding shares to cover taxes for employee stock vesting that reduced the diluted shares by 49,023 shares. There were no repurchases of common stock in the third quarter. We have remaining 268.7 worth a million of authorized for further share repurchases. So this could be good news for future. As Martyn says, I agree with him. This is just a big buy, not for short term, but for long term. To me, I will wait for the guidance, and I might be buying some Enphase as well. I did buy Enphase on that big crash couple of months ago. But I did it just for a quick trade in and out. I made some money, but I can see I could possibly allocate some money in Enphase on the earnings call, on my payday on Friday. This is not a financial advice. Okay, let me get this straight. This is not financial advice. It's just my own investment strategy. But I'm seeing the numbers, and it's just wow. I bet Elon Musk last week, those who were watching Tesla with me, I bet Elon would be well happy with these numbers, and Tesla would be skyrocketing. During the third quarter, we ramped shipments of our 4th generation Enphase Energy. Okay, so we'll hear this on the call. Business highlights, what we've got here. On October 27th, Enphase Energy announced a complete off-grid solar and battery solution for the US market. On October the 6th and August the 11th, Enphase Energy announced the IQ Battery 5P with flex phase for India and Australia. So we are expanding to other markets. On October the 2nd, Enphase Energy announced a collaboration with Essent, one of the largest residential energy providers in the Netherlands. On 18th of September, Enphase Energy announced enhancements to its SolarGraph platform, including new third-party ownership, financing integrations, faster proposal, availability in Japan, and regional national renewable energy laboratory validation. On 10th of September and 8th of September, Enphase Energy announced US pre-orders for its new IQ electric vehicle charger 2 and IQ N9 3P commercial microinverter for 480 volts 3-phase commercial system respectively. September the 9th, Enphase Energy announced its new IQ bi-directional EV electric vehicle charger architecture for vehicle to home and vehicle to grid capability. August 28th, Enphase Energy announced new software that enables homeowners with existing IQ7 microinverter-based system to expand their solar capacity using IQ8 inverters. Okay, so we have some good news. Fourth quarter, this is important. Fourth quarter financial outlook. So right, we broke below that $36 mark, but currently it doesn't look massively volatile anymore. Let's wait for the guidance. We are about 10, 11 minutes away from the actual webcast. Those who just joined, we are looking What is going on? Somebody says Joby 10% short squeeze. Let me just check this quickly. Joby. Oh, we have some good news for Joby then. That is interesting. Thank you for letting me know, because I did miss my notifications. Let's have a look what we've got. If we have any news for Joby. If we have any news for Joby. That's interesting. Joby. Yeah, so the rumor was correct. I thought it was official announcement, but it wasn't, and I completely forgot about it. Okay, could have been nice trade in and out. Look at this. Joby, we teamed up with NVIDIA as the only aviation launch partner for their new IGX Thor platform. This powerful collaboration is set to accelerate the development of Superpilot, bringing next-era autonomy and safety to electric flight. I read the official announcement below. So, I'm liking this. I will be... I will be sharing this. Wow. Massive news. That is massive news. Congratulations, team Joby. Just so they know I appreciate it, you know. Congratulations, team Joby. Tag Joby, and obviously tag Martyn and Sensei as we do, because we have nice little synergy click on X. Sensei, at Sensei. Right, that's some great news. Excuse me. Wow, I'll be talking about this tomorrow. And we talked about the earnings for eVTOL stocks next week. Joby could have a good run. On the back of this news. And if they bring good guidance on the certification progress. Wow. Okay, well, thanks for letting me know. What is Enphase doing? Let's get back to Enphase, because we are now covering Enphase. Go away. Very good. So we are going down. We are laddering down. The investors are not happy with the guidance. Let's catch up with the chat, and I will read through the guidance as well. So thank you very much for joining me. Those who just joined, we are waiting for Enphase Energy, their third quarter earnings call for the webcast to start. I've got it here on standby. We are about 8 minutes away. Let's just quickly check with the chat. Catch up with the chat. Trixie says we will be up. Cedar Trees could see $6 price swing in Enphase in after hours. Well, hopefully not. Or maybe hopefully yes. So we have better buying opportunity. Martyn says great opportunity to buy. Great beat, yet a sell-off. Yeah, it's crazy. Cedar Trees, Enphase Energy, third quarter revenue. Yeah. We've been through it, and beat. Big beat, quite big beat on earnings per share as well. Thanks for the update. Anders Nicolaisen, 60 million revenue beat is very good. Now with falling rates, margins FCF will benefit. Yes. Beat on all metrics. Yes, I agree. Benefit, yeah. Sharpshooter, I'm impatient. I bought at 34.90. Donda is here. What's going on with Joby? Yeah, we just been through it. The news with NVIDIA, partnership with NVIDIA. That's great. I'm quite gutted because I missed it, and I saw it today, and I'm thinking, wow, so it's already been announced. I must have missed it, and now boom, Joby just announced it. So yeah, could have been there first, but I can't be first everywhere, you know. Can't be first everywhere. Joby is flying. Yeah, that could be a good run up with Joby. What is Joby doing now? Tell you what, No. Joby, historically, anytime we have good news, they have a push. They have a push 10-15%. The next day, or the next couple of days, 30-40% retraction. Historically, all the time. So it could be a little guidance for you, not an advice. I don't know. I don't know myself how I would trade now. I would probably just wait. Yeah, it's not the best place to enter now for either short or long, buy or sell. So I would just wait. We missed it. I missed it. Sorry, I missed it. So I'll be waiting. I'm definitely waiting for the earnings call for the guidance. There'll be many more opportunities to enter any eVTOL stock. There'll be more better entries and better differences, better swings as well. Those who are just joining, I see we have more and more people joining. I'm Vaz, you are watching Martyn Lucas Investor. We just caught live, pretty much live, big news on Joby Aviation. Thank you, Donda, for bringing this to my attention. We are waiting. We are about 4 minutes away from the actual earnings call from the webcast for Enphase Energy third quarter. We had a massive beat on pretty much all metrics, yet Enphase has been selling off. Enphase has been selling off and it's been laddering down. So very interesting. Let's wait for the guidance. I'm very, very curious what the reaction is going to be. And speaking of guidance, we have it here in the investors letter. So fourth quarter 2025 financial outlook. For the fourth quarter of 25, just turn the heat off. Enphase Energy estimates both GAAP and non-GAAP financial results as follow. Revenue to be within the range of 310 to 350 million. So it's slightly lower, which includes shipments of 140 to 160 megawatt hour of IQ batteries. His outlook does not include any safe harbor shipments. I do apologize. I've got something is wrong with my throat today. GAAP gross margin to be within the range of 40 to 43%, including approximately 5 percentage points of reciprocal tariff impact. Non-GAAP gross margin to be within the range of 42 and 45%. So we have a slight cool off, but I can imagine this is natural for the end of the year. You have Christmas period. People are not focusing on building, refurbishing, and upgrading their homes during the winter time. So this is probably natural. I can bring up the historic numbers. We can have a look together if we have a bit of time, including approximately 5 percentage points of reciprocal tariff impact. Non-GAAP gross margin includes stock-based compensation expense and acquisition-related amortization. GAAP operating expenses to be within the range of 130 and 134 million. Non-GAAP operating expenses to be within a range of 77 million to 81 million, excluding 53 million estimated for stock-based compensation expense, acquisition-related amortization, restructuring, and asset impairment charges. For 2025, Enphase expects a GAAP tax rate of 18 to 20% and non-GAAP tax rate 14 to 16%. And then we have some more numbers. So we will hear about this on the earnings call, definitely on the actual webcast. We are about 2 minutes away from the webcast. Let's see if they start on time. Historically, 98% of stocks I've seen, I've watched, I've listened, they never start on time. So let's see if Enphase is so disciplined and we will start on time, or if we have a few minute delay. I mean, Elon Musk, he started, well, like 8 minutes late last week, didn't he? Let me get a bit of tea. So, Enphase currently holding at the $35 mark. Do we have any comments here? Enphase price, I think, will go back up, just need to be calm. Well, Enphase is there for a long ride. If you look at the previous levels, have a look at the 5-year. If I do it now, have a look at the 5-year chart. I remember last year, Martyn had Enphase all the time around $140 on the screen when he goes through his stocks on the opening bell. So we have a massive, probably undervaluation, and we can see a massive upside as well. So let's wait for the guidance. And somebody says, Anders says, CEO keep buying dips, and Q4 guiding is the problem short term. This could be why we have this reaction. This well likely could be the reason. So let me just refresh the page. We haven't started yet. I'll mute this. I'll play the audio. Playing. Is it Vivaldi? No, I'm just. We are playing classic music. And we are starting.
Hey everyone, and welcome to the Enphase Energy's third quarter 2025 financial results conference call. All participants will be in a listen-only mode. Should you need assistance, please signal a conference specialist by pressing the star key followed by 0. After today's presentation, there will be an opportunity to ask questions. Please also note today's event is being recorded. At this time, I'd like to turn the floor over to Zach Friedman. Sir, please go ahead.
Good afternoon, and thank you for joining us on today's conference call to discuss Enphase Energy's third quarter 2025 results. On today's call are Badri Kothandaraman, our President and Chief Executive Officer, Mandy Yang, our Chief Financial Officer, and Raghu Belur, our Chief Products Officer. After the market closed today, Enphase issued a press release announcing the results of its third quarter ended September 30, 2025. During this conference call, Enphase management will make forward-looking statements, including but not limited to statements related to our expected future financial performance, market trends, the capabilities of our technology and products, and the benefits to homeowners and installers, our operations, including manufacturing, customer service, and supply and demand, anticipated growth in existing and new markets, including the TPO market, the timing of new product introductions and enhancements to existing products, and regulatory, tax, tariff, and supply chain matters. These forward-looking statements involve significant risks and uncertainties, and our actual results and the timing of events could differ materially from these expectations. For a more complete discussion of the risks and uncertainties, please see our most recent Form 10-K and 10-Qs filed with the SEC. We caution you not to place any undue reliance on forward-looking statements and undertake no duty or obligation to update any forward-looking statements as a result of new information, future events, or changes in expectations. Also, please note that financial measures used on this call are expressed on a non-GAAP basis unless otherwise noted and adjusted to exclude certain charges. We have provided a reconciliation of these non-GAAP financial measures to GAAP financial measures in our earnings release furnished with the SEC on Form 8-K, which can also be found in the Investor Relations section of our website. Now I'd like to introduce Badri Kothandaraman, our President and Chief Executive Officer. Badri.
Good afternoon, and thanks for joining us today to discuss our third quarter 2025 financial results. We had a good quarter. We reported quarterly revenue of $410.4 million, our highest revenue level in 2 years. We shipped 1.77 million microinverters and a record 195 megawatt hours of batteries. We generated free cash flow of $5.9 million. Our Q3 revenue also included $70.9 million of safe harbor revenue. As we exited Q3, our microinverter channel inventory returned to normal, while our battery channel inventory was slightly elevated due to sell-in of our new 4th generation battery. For the third quarter, we delivered 49% gross margin, above the higher end of our guidance range, 19% operating expense, and 30% operating income, all as a percentage of revenue on a non-GAAP basis and including the net IRA benefit. Mandy will go into our financials later in the call. Our customer service NPS was 77% in Q3 compared to 79 in Q2. The average call wait time was 2 minutes. To further enhance the customer experience, we are preparing to launch our AI-powered assistant in the Enphase app, which will help customers find answers quickly, troubleshoot issues, and manage their systems more intuitively. Our data engineering team continues to strengthen the intelligence behind our support systems, leveraging analytics and machine learning to identify common issues, predict service needs, and reduce response times across all regions. Let's cover operations. In Q3, we shipped approximately 1.53 million microinverters from our U.S. facilities booking 45x production tax credits. Our domestically made microinverters help residential lease PPA providers and commercial asset owners to qualify for the 10% domestic content ITC adder. We grew our U.S. battery production in Q3, shipping 67.5 megawatt hours compared to 46.9 megawatt hours in Q2. We are now building our fourth generation battery, the IQ Battery 10C, in the U.S. using domestically made microinverters, domestically made thermal and battery management systems, as well as packaging, while only sourcing cell packs from China. These batteries have greater than 45% domestic content and help our lease PPA customers qualify for ITC bonuses. We remain on track to source non-China cell packs by the end of this year, scaling into battery builds in the first half of 26. Therefore, we expect limited exposure to the recent China-related tariffs as our supply chain transitions away from China. In summary, our U.S.-made microinverters and batteries can help customers qualify for domestic content ITC bonuses as well as meet FIAC compliance, even as the criteria becomes increasingly stringent each year, a big differentiator for Enphase. Let's now cover the regions. Our U.S. and international revenue mix for Q3 was 85% and 15% respectively. In the U.S., our revenue increased 29% in Q3 compared to Q2, primarily due to increased demand as well as higher safe harbor revenue of $70.9 million compared to $40.4 million in Q2. The overall sell-through of our products was up 9% in Q3 as compared to Q2. In Europe, our revenue decreased by 38% in Q3 compared to Q2, while overall sell-through decreased by 27%. Europe negatively impacted our Q3 revenue by approximately $25 million compared to Q2, a larger sequential decline than expected. The overall business environment across the region is still challenging, but we are maintaining our discipline on the channel as well as targeting specific growth areas that could drive higher 2026 revenue. I will now provide some color on key markets in Europe. In Netherlands, the solar demand remained soft in Q3. We are making steady progress towards the sizable battery retrofit opportunity we see in 2026 and beyond. The rising solar export penalties and the planned sunset of net metering at the end of 2026 are creating a compelling use case for storage. With an Enphase installed base of about 475,000 residential solar systems in Netherlands, we estimate a $2 billion total opportunity for batteries. We recently announced a collaboration with Essent, one of Netherlands' largest residential energy providers, or REPs, enabling customers to add IQ batteries and participate in Essent's Smart Steering VPP program. This program is designed to boost self-consumption and lower utility bills. Through the Smart Steering, participating customers may receive fixed monthly compensation of up to 122 euros, depending on the battery size. Essent intelligently controls charging and discharging to optimize value for the home and the grid, supporting a more reliable energy system. Building on this momentum, we are advancing additional partnerships and expect battery sales in Netherlands to be a growth driver in 2026 and beyond. In France, the residential demand remained muted in Q3. Many households waited for the October 1st VAT cut of 5.5% for sub-9 kilowatts, but its limited scope and dependence on low-carbon panels reduced the impact. Meanwhile, 2025 policy changes have extended payback period, creating a tougher market for installers. We are focusing on self-consumption, where low export incentives strengthen the value proposition for solar plus battery solutions. Lower export value and stop-start incentives have kept many households on the sidelines, softening demand for both solar and batteries. Even so, our performance was relatively stable, supported by our partnership with leading installers and the strong uptake of the flex-phase battery, which provides both self-consumption as well as three-phase backup. In the UK, residential solar and storage adoption is stable, driven by time-of-use tariffs, low export rates, and a growing focus on resilience and self-consumption. We are deepening ties with REPs and supporting them with a robust API platform. In Q3, we also added backup capability for our batteries in UK, which was long overdue, and further expanded our resilience offering. In Australia, the residential storage demand is accelerating following the July 2025 battery rebate program, with installers bundling PV and batteries and the average battery sizes increasing as low export rates push self-consumption. Distribution operators are rolling out dynamic export limits and interoperability standards favoring systems with fast controls and three-phase backup. Against this backdrop, we launched the FlexPhase battery in Q3, delivering three-phase backup as well as flexible power to meet evolving DSO requirements. We also launched IQ8P high-power microinverters for higher power modules, as well as our newest IQ EV chargers, strengthening our position in the strategic market. Let's discuss our outlook for Q4. We are seeing a further ramp in the U.S. demand in Q4, primarily due to homeowners moving to capture the expiring 25D tax credit before the end of this year. In the first 3 weeks of October, our U.S. sell-through was up over 20% compared to the Q3 average. We anticipate this elevated activity will continue for much of Q4. We also anticipate that our overall sell-through for the company to be between $350 to $400 million in Q4. However, our revenue guidance is in the range of $310 to $350 million. And for IQ batteries, we expect to ship between 140 and 160 megawatt hours. There are two reasons contributing to this lower revenue guidance. First, we had $70.9 million of safe harbor revenue pulled in from Q4 to Q3 as customers wanted the product before the U.S. Treasury guidance in Q3. And second, we are reducing shipments of product to the channel in order to destock the channels as we head into 2026. This positions us to enter 2026 with a healthy channel, setting us up for a clean Q1 and beyond. Currently, we are approximately 75% booked to the midpoint of our Q4 revenue guidance. Safe harbor opportunities are not yet included in our Q4 guidance, but similar to Q3, they present upside opportunity. We are working closely with several TPO partners on safe harbor planning and are well positioned to support both methods of safe harbor, the 5% method as well as the physical work test method based on each partner's preference. Let's look ahead to 2026. While we don't typically guide beyond the next quarter, we are sharing our preliminary views to frame expectations. For Q1 26, we anticipate a larger than normal seasonal decline following the expiration of 25D tax credit and estimate a company revenue of $250 million. We view Q1 as a cycle trough with conditions improving through the rest of the year. Why are we constructive on the balance of the year? There are three external drivers that could support recovery. First, the U.S. power prices are rising about 5% this winter, with additional increases expected in 2026. Second, interest rates are declining, easing affordability. Third, new and attractive financing solutions are entering the market to help offset the loss of 25D. Taken together, these drivers could enable a second half of 2026 rebound and set the stage for growth. In addition, we see several Enphase specific revenue drivers that are expected to fuel growth through 2026. Our fourth generation battery, the IQ Battery 10C, is positioned to capture share through lower installation costs for backup. We are now entering the 480 volt commercial solar market with our IQ9 and GaN microinverter, which we expect to ship this December and ramp in 2026. We are also leveraging strategic partnerships to capture the battery retrofit opportunity in Netherlands. Our newest IQ EV chargers and upcoming IQ bidirectional EV chargers are poised to expand our market, and our fifth generation battery system paired with IQ9 residential microinverters will drive a step change reduction in system cost in both the US and Europe. While there is uncertainty around 2026, we remain confident in our ability to execute and deliver growth across these vectors. Now let's talk about financing. The industry is moving towards the TPO model in 2026. Enphase supports all the major TPOs today. We are further strengthening these relationships through safe harbor and tax equity support, providing domestic content as well as FEOC compliant products, offering O&M services, solar graph integration, and helping to implement innovative financing solutions. Looking ahead, we see a strong trend developing in the market towards prepaid lease offerings, which can provide homeowners with the option of ownership after 5 years. In this model, the TPO captures the 48E tax credit and in turn offers the homeowner an attractive lease prepayment or a lower monthly payment when paired with a loan. This structure makes the economics similar to today's solar loan economics with the 30% 25D tax credit. Furthermore, financing providers like the Enphase system value proposition, which includes not only the Enphase equipment, but support for operations and maintenance, as well as solar graph integration to offer an overall attractive package to
selling
consumers.
off even more.
We believe the TPO market is poised to growth in 26 and see multiple ways for Enphase to support this growth. Let's talk about products, starting with IQ batteries. In August, we began shipping our IQ battery 10C, supplied by our manufacturing facilities in the U.S., delivering domestic content, which is significant value in the growing TPO market. As a reminder, we introduced our fourth generation battery towards the end of June. The fourth generation battery stands out for its smaller footprint, enhanced features, easy installation, and reliability. It delivers 30% more energy density, occupies 62% lesser wall space, and reduces installation cost of backup compared to our prior products. In addition, our fourth generation battery system also includes the IQ meter collar, which simplifies backup, and IQ Combiner 6C, which seamlessly integrates solar, batteries, EV chargers, and load control. The IQ meter collar is now approved by 39 U.S. utilities, and that list is growing every week. We are making strong progress in building partnership with REPs as well as VPP operators around the world that are looking for flexible distributed energy capacity. Homeowners can receive attractive compensation for installing Enphase batteries as part of these programs. In addition to the Ascent program I mentioned earlier, we signed multiple new contracts with the utilities, including one recently with San Diego Community Power. With advanced APIs, our batteries seamlessly integrate into VPPs in regulated markets like the US and participate in wholesale energy markets in deregulated regions such as Europe and Australia. We are actively engaged currently in over 53 VPP programs worldwide, and this is growing at a strong pace. Let's talk about microinverters. In September, we opened US pre-orders for the IQ9N commercial microinverter, our first microinverter powered by gallium nitride or GaN. We expect to begin shipping the product in December, as I said earlier. We believe IQ9 marks a major leap in performance and platform flexibility, and most importantly, unlocks a 2 gigawatt market opportunity by enabling us to service 480 volt 3-phase commercial systems in the USA for the first time. This represents an approximately $400 million total addressable market for Enphase, which we believe will help drive additional revenue in 2026 and beyond. IQ9 microinverters are expected to meet FEOC compliance as well as domestic content right off the bat, offering a powerful and reliable alternative in a market still dominated by Chinese equipment. Why does GaN matter? GaN replaces legacy silicon power devices to deliver faster switching, better thermal performance, and higher reliability. We have invested over 5 years in the semiconductor technology, and its rollout sets a new trajectory for cost and performance across our next generation microinverters, batteries, bidirectional EV chargers, and more. Let's talk about EV charging. We are now shipping our latest and greatest IQ EV Charger 2 across 18 European countries as well as Australia and New Zealand. The charger supports up to 22 kilowatts three-phase charging and works as a standalone unit or fully integrated with Enphase Solar and batteries. We have opened U.S. pre-orders and expect Q4 shipments into the U.S. with further expansion planned in additional European markets and India. Let me share an update of our IQ bidirectional EV charger expected to launch in mid-2026. We showcased this 11 kilowatt solution powered by three high-performance GaN-based microinverters of 3.84 kilowatts each at the recent RE Plus trade show. The IQ BiDi EV charger only needs to be paired with the IQ meter collar for a simple, powerful configuration that enables home backup and grid services. Together, these two components offer one of the lowest cost and simplest ways to provide whole home backup, even without rooftop solar or home batteries. Homeowners can just start with this configuration and expand over time by adding Enphase Solar and batteries to build a full energy system. Let's now switch to SolarGraph, our all-in-one platform purpose-built for installers. We have been rolling out major enhancements, including seamless integration with TPO partners, an express editor that allows installers to quickly adjust proposals on the spot, a powerful custom tariff builder, advanced installer management tools, and a simplified AI-driven design experience. We believe these updates make it easier for installers to service more homeowners at the kitchen table with greater flexibility, speed, and financial transparency. We plan to expand the SolarGraph platform into additional markets and countries and introduce new features to support productivity, sales velocity, and customization for solar installers. Let me conclude. There is a significant change occurring in our markets. The loss of the 25D tax credit is a near-term headwind that will impact our results in early 2026. But we believe there is also tremendous positive change that is bolstering the long-term outlook for our business. We are entering an interest rate reduction cycle, which historically has been the catalyst for residential solar sector. Power price outlooks are surging on the back of AI power demand as well as overall electrification growth. Utilities are struggling to keep up with this demand, creating bottlenecks and price inflation across the grid that are poised to accelerate. We provide homeowners and commercial businesses with an easy off-ramp from this price inflation with a solution that can be interconnected in 90 days. The U.S. residential and commercial rooftop solar industry brings on nearly 2 gigawatts of new power interconnected to the grid every quarter, with the 48E tax credit expanding to more customers in 2026 through innovative financing solutions like the prepaid leases. We see an attractive value proposition for solar driving recovery in the second half of 2026 and beyond. We are laser focused on the revenue drivers we can control, growing battery sales with our fourth generation battery, expanding into the 480-volt commercial market with GaN microinverters, capitalizing on battery retrofits to our solar install base in Netherlands, ramping our newest EV chargers now and the BiDi EV chargers, which will launch later in 2026. And last, launching our fifth generation residential batteries along with IQ9 residential microinverters to reduce system costs significantly for residential solar for both US as well as Europe. As always, we remain focused on operational excellence, product reliability and quality, and customer service, delivering best-in-class solutions for our long-term growth markets. With that, I will turn the call over to Mandy for her review of our financial results. Mandy?
Thanks, Badri, and good afternoon, everyone. I will provide more details related to our third quarter of 2025 financial results, as well as our business outlook for the fourth quarter of 2025. We have provided reconciliations of these non-GAAP to GAAP financial measures in our earnings release posted today, which can also be found in the IR section of our website. Total revenue for Q3 was $410.4 million. We shipped approximately 784.6 megawatts DC of microinverters and a record 195 megawatt hours of IQ batteries in the quarter. Q3 revenue included $70.9 million of safe harbor revenue. As a reminder, we define safe harbor revenue as any sales made to customers who plan to install the inventory over more than a year. Non-GAAP gross margin for Q3 was 49.2%, compared to 48.6% in Q2. GAAP gross margin was 47.8% for Q3, compared to 46.9% in Q2. Non-GAAP gross margin without the net IRA benefit for Q3 was 38.9%, compared to 37.2% in Q2. Reciprocal tariffs impacted our gross margins by 4.9% in Q3. GAAP and non-GAAP gross margin for Q3 also included $42.5 million of net IRA benefits. Non-GAAP operating expenses were $78.5 million for Q3, compared to $77.8 million for Q2. GAAP operating expenses were $130.1 million for Q3, compared to $133.5 million for Q2. GAAP operating expenses for Q3 included $47.4 million of stock-based compensation expenses, $2.9 million of acquisition-related amortization, and $1.3 million of restructuring asset impairment charges. On a non-GAAP basis, income from operations for Q3 was $123.4 million, compared to $98.6 million for Q2. On a GAAP basis, income from operations was $66.2 million for Q3, compared to $37 million for Q2. On a non-GAAP basis, net income for Q3 was $117.3 million, compared to $89.9 million for Q2. This resulted in non-GAAP diluted earnings per share of 90 cents for Q3, compared to 69 cents for Q2. GAAP net income for Q3 was $66.6 million, compared to $37.1 million for Q2. This resulted in GAAP diluted earnings per share of 50 cents for Q3, compared to 28 cents for Q2. We exited Q3 with a total cash equivalents, and marketable securities balance of $1.48 billion, compared to $1.53 billion at the end of Q2. The 5-year convertible notes we raised in 2021 are coming due on March 1st next year, and we expect to settle the principal amount of $632.5 million at maturity with our cash on hand. As of September 30, 2025, we have approximately $280 million of production tax credit, or PTC, receivable on our balance sheet, net of income taxes payable. $108 million is related to U.S.-made microinverters shipped to customers in 2024, and $172 million is for shipments made in the first 9 months of 2025. As we elected direct pay, the net PTC would be refunded by the IRS through our annual tax return filing. Due to extended IRS processing timelines, we expect to receive 2024's $108 million payment from the IRS in Q2 next year. We expect to receive our 2025 tax refund sometime in the first half of 2027, based on the current estimated IRS processing time. As part of our anti-dilution plan, we spent approximately $1.7 million by withholding shares to cover taxes for employee stock vesting in Q3. That reduced the diluted shares by 49,023 shares. There were no repurchases of our common stock in Q3 due to our limited free cash flow generation in the quarter. We are evaluating opportunities to accelerate the monetization of our PTC. Our remaining buyback authorization is approximately $269 million, and we remain confident in our overall business outlook over the long term. In Q3, we generated $13.9 million in cash flow from operations and $5.9 million in free cash flow. Capital expenditure was $8 million for Q3, compared to $8.2 million for Q2. Now let's discuss our outlook for the fourth quarter of 2025. We expect our revenue for Q4 to be within a range of $310 to $350 million, which includes shipments of 140 to 160 megawatt hours of IQ batteries. The revenue guidance doesn't include any safe harbor transaction. We expect GAAP gross margin to be within a range of 40 to 43%, including approximately 5 percentage points of reciprocal tariff impact. We expect non-GAAP gross margin to be within a range of 42 to 45%, including the reciprocal tariff impact. Non-GAAP gross margin excludes stock-based compensation expense and acquisition-related amortization. Given the vast majority of our manufacturing occurs in the U.S., and due to fluctuating tariff impacts to our international manufacturing cost baseline, we will no longer be guiding and reporting gross margins without the net IRA credit. As always, gross production tax credit earned will be reported in our 10Q quarterly statement and 10K annual financial report filed with the SEC. We expect our GAAP operating expenses to be within a range of $130 to $134 million, including approximately $53 million estimated for stock-based compensation expenses, acquisition-related amortization, and restructuring and asset impairment charges. We expect our non-GAAP operating expenses to be within a range of $77 to $81 million. For 2025, we expect our GAAP tax rate of 18 to 20% and a non-GAAP tax rate of 14 to 16%. With that, I'll open the line for questions.
Ladies and gentlemen, we'll now begin the question and answer session. To ask a question, you may press star and then one on your touchtone phones. If you are using a speakerphone, we do ask that you please pick up your handset before pressing the keys.
This is the most important and interesting part for you as a retail investor. You will get you can get good guidance, you can get good answers, and you can find a lot of information that was not told on the earnings call. So don't go anywhere. This is the most important part. Always Q&A.
And our first question today comes from.
And also could be a reaction on the stock price if we have a good answer or a bad answer.
Guys, can you talk a little bit about the dynamics going into the first quarter next year in terms of the amount of inventory that you feel like is appropriate? Are you still thinking about kind of 8 to 10 weeks worth of inventory out in the channel, as you enter into the first quarter of next year?
So Colin, you may not have heard our comments in the prepared remarks. We anticipate an overall sell-through for the company to be between $350 to $400 million in Q4. But we are only guiding Q4 revenue from, in the range of $310 to $350 million. So therefore, you can do the math, and that represents approximately $45 million of undershipment at the midpoint. So we are very cautious. We want 2026 to have a very healthy setup in the channel, and therefore, and our rule of thumb is 8 to 10 weeks. That's our rule of thumb. So we'd like to basically be abundantly cautious and not overload the channel. That's why we gave the revenue guidance from $310 to $350 million. Also, another reason for a reduced Q4 guidance is we had about $70 million of safe harbor pulled in from Q4 to Q3 as customers wanted the product before the U.S. Treasury guidance in Q3. So we beat the guidance handily for Q3, but we are more cautious for Q4.
Thanks. I'll take the clarification offline. With the new battery, can you talk about pricing dynamics? Are you able to push through incremental price increases with the incremental functionality, or are you using some of that functionality as a way to pick up share?
Yeah, we are not raising any prices. In fact, I'm sure you know, over the last 2 quarters, there have been tariffs. So we pay approximately about 40+% tariff on the cell packs that are coming from China, as well as the cost of making batteries in the U.S. is quite expensive. So, but on the other hand, what we have done is not change our pricing, and our position is basically to capture share. You see, our gross margins are already pretty healthy. Our gross margins for Q3 were 49%, despite us including a 5% tariff in that 49%. So our gross margins are good. The way our gross margins will become even better on batteries is we are working on our 5th generation battery, and that 5th generation battery will take the cost down significantly. It is a 100 ampere hour cell pack. It is a much higher energy density, almost 50% compared to the 4th generation battery. And it's got, the power electronics is actually collapsed into one single board. So it's a very elegant form factor. It is a stackable battery. You can put 20 kilowatt hours, and it'll appear like a monolithic structure on the wall, not as 4 boxes. So we are going in the right direction on batteries. The 4th generation, we expect to make a dent with it because what we have done, and we have said this very clearly before, our 3rd generation battery was very good for grid-tied backup, which is prevalent in California due to NEM 3. However, our 4th generation battery can do both grid-tied and backup for almost the same cost. The backup comes with a little more, slightly more, because of the addition of the meter collar, which is a few $100s only. And, we introduced that product into the channel. We started shipping in June, and installers basically started originating around that time frame. And it takes installers anywhere from 60 to 90 days from that origination time to start the installations. In addition, we introduced the domestic content 4th generation battery in August, manufacturing in the U.S. So, but we are on a very healthy clip. Just as a statistic, in Q3, of our total battery shipments into the U.S., the 4th generation battery constituted 40% of the overall U.S. shipments.
Thanks, guys.
Our next question comes from Brian Lee from Goldman Sachs. Please go ahead with your question.
Hey, everyone. Good afternoon. Thanks for taking the questions. I had 2 just kind of around the guidance. One is, the non-U.S. revenue. I know you, Badri, walked through some of the European country by country statistics, but I mean, it's really the lowest it's been since 2021 non-U.S. revenue. So I'm just trying to understand a little bit what's going on. I know there's seasonality in Europe. I know the market's weak, but it seems like you're underperforming peers. So is there something company specific going on, whether it's product shift or market share or pricing? And then can you give us a sense of kind of what the go forward is? Is 4Q going to be about the same? Is it down further? Just trying to understand what the recovery path looks like given this low base we're at now. And then had a question on margins as well.
Yeah, you're correct on what you said, that Europe has got seasonality in Q3, so we are seeing a portion of that. But the markets we are in, basically Netherlands, I described the dynamics to you. It is the end of net metering in Netherlands, so it's an uncertain time for solar. There, what recovery looks like is we just announced a large partnership with Ascent. It's a huge opportunity there. We have 475,000 homes with solar, and unlike the U.S., their energy contracts in Netherlands expire, are only valid for 1 to 3 years, for example. So when they have the new energy contract at that time, their utility bills for people who have bought solar are going to be higher. In order to prevent that situation, there is a very elegant option there, which is buy batteries for self-consumption for the customer while the utility pays you in order to support imbalance for the utility. So it's really a beautiful option which should spur our battery sales throughout 2026. So basically, weak solar market due to net metering going away, but has got the potential to become a strong solar plus battery market. That's in the Netherlands. In France, what has happened is, again, in 2025, the feed-in tariffs, France used to be quite healthy. France used to have net metering, and the feed-in tariff was also quite good, which is the export incentive was not as high as the import incentive, but it was pretty good. That export incentive has now been reduced to a very small amount. So in France, also, self-consumption is the name of the game. And because of that, the market in France has reduced quite significantly. As you know, Enphase has more than 50% market share in France. And so we see that. However, what we are doing there is basically to sell solar plus storage to end consumers. Their payback is going to go up compared to what they had before, but will be manageable of the order of 8 to 10 years. For people who cannot afford to add batteries, we are also coming up with a solution to steer their solar and not export it back to the grid. Steering the solar can be diverting the solar to an EV charger, diverting excess solar to a heat pump, or diverting an excess solar to a hot water heater. We have introduced all of those solutions as well. So in France, it is the elimination of the 5.5% VAT tax for sub 9 kilowatts installation should give a boost, but it is not giving today because of an added criteria of low carbon content panels. The industry is trying to meet that by ramping on low carbon panels. That may take a little bit of time, but we expect the market to recover. However, it is going to be a solar plus battery market. It is not going to be the same as what it was before. Similarly, in Germany, there have been various start-stops. There have been reduction of feed-in tariffs. In Germany, our performance is a little better because we work with a couple of the leading installers in Europe who are headquartered in Germany. So, we're doing okay there. In UK, we have a strong partnership with one of the top REPs. The same thing there. It's a solar plus storage market. We just introduced backup capability as well. So that market is stable. So really what we are talking about is Netherlands and France. We have clear plans there. I would say because of the big reduction in the time, there is a lot of competition. I do have to acknowledge that competition. So what are we going to do? We believe our response to the competition is innovation. What are we going to innovate on? Today our third generation flex phase battery is the mainstream battery in Europe. In a couple of quarters from now, we are going to have the fifth generation battery, which is going to take the costs down significantly. And it is going to add a lot of value. It is an AC coupled battery with modularity, with the high, with high quality, with superior serviceability, and now it is going to be stackable with an outstanding cost structure. So, in addition to that, we are also going to be introducing IQ9 starting early 2026 for residential microinverters. IQ9 with GaN also can support up to 10% higher power for the same cost structure. So cost per watt for the installers is a big deal, and we are going to make sure that their system cost is reduced significantly. So I talk a lot, but that's how the trajectory looks for us in Europe.
No, appreciate all that additional color. Maybe just one on the margins. The guidance, at the midpoint, non-GAAP gross margin guidance, 43.5%. I mean, it's lower than you've seen in some time. You did the 49% this quarter. Can you kind of help bridge the gap? Why margins are down so much? And then, what sort of additional margin decline should we expect on the the $250 million revenue low point that you telegraphed for Q1 next year? Thank you.
Yeah, our margins basically are impacted, as we said, by a 5% reciprocal tariff. So that's the straight answer. Without the reciprocal tariff that was introduced in 2025, we would be at 48.5, which is a reasonable number. Now, on which products is that affecting us? It's mainly on batteries for us, because the batteries have a 40% tariff. We have diversified our supply chain well enough on microinverters in the last 3 to 5 years that our microinverter impact is not that high as compared to batteries. So what does recovery in gross margin look like? The recovery in gross margin is when our battery costs come down. And that is by moving to non-China sources, which we are going to move by early 2026 when we plan to ramp up our non-China batteries, as well as our 5th generation battery, which will result in a step change in costs. So at this time, it is too early for us to talk about our Q1 gross margins. But look, I mean, you can see that we have managed the last 2 years, in fact, with our gross margins quite stable. Our gross margins have been in the 45 to the 50 range all the time in the last 2 years, where there has been significant pressure in revenue. So we expect to manage like that. It's too early to talk about Q1 guidance.
Just a super quick clarification. So I think 3Q you said the gross margin result included a 4.9% tariff impact. So you're saying there's an incremental 5 percentage point impact in the 4Q guidance? So it's not flat impact Q to Q, it's an incremental 5%? Just want to clarify that.
Let me say like this. In Q3, we shipped a lot more microinverters because of the $70.9 million safe harbor shipments, which was all microinverters. So therefore, our gross margin was elevated. And yes, that is correct. Our gross margin was 49%. And if we did not have the reciprocal tariff, the gross margin would have been 54%. What we are saying in Q4, our gross margin is 43.5%. And that reflects more a normal mix. We have not yet indicated any safe harbor right now at this point in time. That could change. But with the current mix, we are talking about 43.5%, including a 5% tariff impact. That means without that 5% reciprocal tariff impact, our gross margin would have been 48.5%.
Thank you for the clarification. Appreciate it.
Our next question comes from Phil Shen from Roth Capital Partners. Please go ahead with your question.
Hey guys, thanks for taking my questions. Wanted to ask if we could get some more color around the safe harbor approach using the physical work test. Thus far, historically, at least through this safe harbor season, you guys have done more safe harbor, I think, or all safe harbor with the 5% of FMV with your customers. And so with the physical work test that you guys announced or talked about today, can you talk to us about how you're helping your customers satisfy that test? In the past, I've heard something about a customized bracket or something, and so was wondering how you guys are helping your customers do that. And then from a revenue contribution standpoint, I think typically the physical work test likely is less revenue as it's not buying the full microinverter versus the 5% safe harbor efforts. So just was wondering if you might be able to talk through that as well. Thanks.
Yeah, I cannot talk about the details because it is customer specific on the physical work test, but we are in very active discussions with all our TPO partners. And the concept is quite simple. It is a custom product that needs to be done for them with higher performance than the standard product and with a custom component that is not in our normal inventory. So that's the high level view. So in fact, it is if they are comfortable, meaning the TPO partners are comfortable, their tax folks are comfortable, this is not a bad way to do safe harbor because it reduces their cash outlay. At the same time, from our perspective, we do not, like all of that revenue in a lump sum manner too. It reflects as they only buy that custom component from us, and therefore they will come back to buy the main microinverter from us at a later stage when they really need it. So it's really the best of both worlds. It is for us, it represents a classic linear revenue, quarterly revenue with no lump sum, which is what we like. And then for them, it represents a possible 10x reduction in the cash that they have to pay compared to the 5% method. So it's all goodness. And when do they do it? When do you do the 5%? You do the 5% perhaps, and I'm not an expert in it, if you want to safeguard 2028, 2029, and 2030. And of course, as always, the 5% as well as the physical work test has to be approved by their tax partners.
Great. Thanks for the color there, Badri. Shifting to the prepaid lease concept, we heard from Tesla on their last earnings call that I think they're launching a PPL, and was wondering if you can talk through some of the efforts that you might be seeing out there. Is this something that you guys might actually participate in on your side? And on a different topic, C&I, it seems like the outlook might be kind of improving there in the sense that a lot of small resi EPCs that historically were dependent on the 25D may be shifting over to the small scale C&I market, and was wondering if that might be a source of strength for you guys as some of these smaller EPCs, maybe their megawatts are down in resi, but they can gain some of that back and again, that small scale C&I. Thanks.
Got it. Yeah, there has been a lot of talk about PPL or prepaid lease in the industry. We have heard independently of us that a few companies are looking at PPL and going to offer PPL. We are also working with a few partners closely. Our opinion, this is our opinion only, we think that the PPL with a loan could be very attractive. The consumer has the option of ownership after year 5. The TPO gets the 48E tax credit, while the consumer gets a lower monthly payment. with no escalator. So this has the economics of a loan structure with the 25D tax credit. So we believe that there is a promise for this structure in order to, revive. We all talked about the 25D loan market will go away, but with, the prepaid lease with the loan, may help that market to be revived. That's our opinion. Of course, it is going to take some time to introduce this, to get everybody comfortable. But our job, what's our job in it? Our job is to support our TPO partners. Our job is to basically bring our long tail of installers and give them access to such a structure. Our job is to help them in O&M, operations and maintenance, because we are really the right people to do it. Our job is to help them in solar graph, where modeling of such a prepaid lease can be done in a relatively simple manner. In addition to things like safe harbor support or tax equity support, so we are looking to work, looking forward to work with our partners to bring that structure. While all the communication will come from those partners, it will not come from us. Our job is to help and support them. Let me leave it at that.
Great. Just a quick follow-up on that as it relates to your job. You mentioned tax equity support. So could that mean you could provide some of your tax liability? And from a financial standpoint, how much might you guys contribute to this effort?
Yes, we are not going to give a number. Also, you asked about, I realized I forgot to answer the question on CNI. CNI, we're very excited. It's the first time Enphase has done a 480 volt three-phase product. And really, if you look at the small CNI market, 80% is 480, 20% is the 208 volt three-phase. With gallium nitride, we are now able to do the 480 volt market. It's 480 volt line to line, 277 line to neutral. The advantages of the microinverter are the same. Exceptional reliability, exceptional thermal performance, rapid shutdown compliant, U.S. manufacturing, domestic content, FIOC compliant. So really an excellent product, and we are going to be selling and marketing this very aggressively, and we expect this to make a dent. As far as what you said, we are also seeing the same thing. Some of our residential installers are also considering to get into the small commercial solar, opportunities, because that is a more stable market right now.
Our next question comes from Praneeth Satish from Wells Fargo. Please go ahead with your question.
Thanks. Maybe just starting on the Q1 26 our outlook of $250 million. Can you provide any more detail on how you're sizing the expected decline in the U.S. Post 25D? So is that based on consultant forecasts, or I seem to recall you have kind of a real-time feed of demand, and so are you seeing any change over the last few weeks now that it's presumably too late to secure the 25D credit?
Yeah, we're not going to give you any numbers on that. We thought we will give you a preliminary look, and that look is $250 million. That's not guidance, but that's our preliminary look. The way our forecasting, let me describe the forecasting process, is we run a process in the company which is a rolling 6-quarter forecasting. and we look at it on a monthly basis. So every month, the job of every sales guy is to go look at his accounts bottoms up, talk to his customers, and then roll up the view for the headquarters, and then we have a meeting about it and decide what to do. So I'm not saying we have 100% certain view, but we usually understand the trends reasonably, and we can make some informed decisions. And that is how we decided to give you our preliminary look today.
Got it. And then maybe just following up on that, on the battery side, can you comment on why in the Q4 guidance it's showing a 50 megawatt hour drop, and then for the Q1 26 outlook, recognizing it's preliminary, but is that based on the Q4 battery level, or is it assume any pickup market share gains tied to the 10C launch?
Yeah, I think it's mainly a function of getting into 2026 with a healthy channel. That's it for the 140 to 160 guide. For Q1, we expect to do well in batteries. We don't expect batteries to be impacted too much next year. And that is because the batteries are still in reasonable shape on, as far as 48 is concerned, the batteries have a much longer lease of life. And we are well positioned in batteries. We have FIAC compliance. We have domestic content. Our IQ meter collar is now qualified with 39 utilities, arguably similar to our leading competitor there. And we are able to cut costs of installations for backup quite significantly. We're very excited about the battery. The installation times are also pretty small. I'm talking physical installation time as compared to the third generation battery. The only thing about the batteries is the tariffs are high, and we have not increased prices. We have held the pricing. We want to gain more share there. The tariffs are high, and I described how we are going to improve the gross margins of batteries. I'm not going to go there again, but that's our strategy.
Got it. Thank you.
Our next question comes from Christine Cho from Barclays. Please go ahead with your question.
Thank you for taking my question. Just a follow-up on that $250 million revenue number for 1Q. Would you say that this is kind of what you're expecting sell-through to be, or would you expect some destocking to continue in the first half of next year?
I would expect, equilibrium there is what I would expect. I would expect maybe slightly higher, but it's too early for me to say.
Slightly higher what?
Yeah, sell-through slightly higher than 250.
Okay. And then apologies if I just missed this, but with the prepaid lease structure that you've been talking about to us that you're going to launch with partners, when should we expect an update with more detail? And with respect to safe harbor for this entity, should we think that it's going to be physical work test here, or would it be 5%? And if the latter, how would you and the partners go about forecasting annual demand for this product, just given that there hasn't been great historical data to lean on?
Yeah, I mean that's a lot of loaded questions there. So quite simple. The prepaid lease will be announced by our partners. And we are not going to tell you an exact date. You'll see it when you see it. That's one. Hopefully in Q4. Yeah, hopefully in the current quarter. Number two is, again, too early for me to talk about safe harbor physical work test or 5%. But let me give you some general color. We are talking with all TPO partners about both farms. There was a misconception that Enphase will not do 5% physical work test. Enphase will not do physical work test. We'll do only 5% safe harbor. That is not true. We do whatever the TPO partner wants and whatever the TPO partner is comfortable with. So options of physical work test, and I already described in detail when people use physical work test and when people use 5%. So we work with all TPO partners. We work on both methods of safe harbor, and we plan to do that even with the PPL.
And our next question comes from Dylan Nassano from Wolfe Research. Please go ahead with your question.
Yeah, hi. Thanks for taking my question. I appreciate the early look into 1Q26. I guess my question is, are you expecting to have to take any further actions to reduce OpEx heading into that? And can you just give us some color around what kind of OpEx model you're considering for 2026, just given the uncertainty around how demand could ramp through the year?
Yeah, I just point you to how we have managed OpEx again in the last 2 years of the downturn. So this quarter, for example, with almost half the revenue that we once had, we are talking about 49% gross margin. The OpEx was approximately 19%, and 30% is our operating income. So we are laser focused on operating income, laser focused on operational excellence. So our run rate today is $80 million a quarter, non-GAAP. It is safe to say we are going to be looking at our expenses to trim down spending in order to track revenue. And it's also safe to say that we won't compromise on any innovation activity or anything that affects customers adversely.
Okay, thanks for that. And then just my follow-up, if we can go back to the conversation around the PPL, Badri, I think you were saying that how Enphase is well suited to offer the O&M service. Can you just clarify? Is that expected to be like an enhanced revenue stream for you guys? And if so, could you just kind of level set us on what that could look like in terms of margins or how much you could get?
Yeah, it is too early for me to talk about any numbers there, but the concept is quite simple. If the TPO partner uses our equipment, we are the best ones to do operations and maintenance. We have a very big data analytics team who basically looks at problems, identify trends, fix problems online, and if necessary, send our field service technicians on site. There is a reason why our NPS is 77% with a call wait time of 2 minutes. So we are really the best. In our partnership with the TPOs, they find this one attractive. Like, for example, in a market like Puerto Rico, for example, if we are able to come in and help in terms of O&M for batteries, that's something that TPOs would welcome, and similar opportunities elsewhere. So it also helps us to structure partnerships where we might offer incentives on the O&M too. So each TPO partnership is unique. We cannot generalize it, and at the same time, it's too early for us to give you color on the numbers. In addition, there is solar graph as well. Now we've been in the design and proposal and permitting business. Solar graph has become very robust. We have worked on the platform for 3 years. We have a lot of installers using the platform, and we are building all of the TPO partners, they all can be accessed through the platform. Similarly, the PPL can be accessed through the platform and can be sold at the kitchen table by the installer. Of course, there is a lot of work that needs to happen for that, but we are there in order to do that work. So solar graph integration, operations and maintenance, safe harbor support, and tax equity support on a as needed basis. Those are the benefits that we offer.
Thank you.
Our next question comes from Julian Dumoulin-Smith from Jefferies. Please go ahead with your question.
Hey, thanks, team. Very much appreciate it. Look, maybe to follow up on this 250, obviously you guys are speaking to the year-over-year trends here. How do you think about that annualizing? Like, what's the early expectation about the offsets here, right? Like, be it PPL plus loan or what have you, that would otherwise mitigate it, right? You describe it as a seasonal trend and an exacerbated seasonal trend of 1Q. But what's to suggest that doesn't persist, right? I mean, if you adjust your 1Q 25 for the safe harbor, it looks like it's down almost 20%, which is kind of consistent with industry trends that are contemplated for the full year 26. Can you speak to maybe the cadence of 26, what you're seeing? You talk about these early, strong developing trends on PPL. Is that supposed to mitigate in the back half of next year, for instance?
Yeah, I mean, it's impossible now for me to provide any quantification, but what we said is the following. We, in fact, said we are constructive on the balance of the year. We said there are three external drivers that support recovery. One is the power pricing, which you're aware. It is increasing by 5% this winter with additional increases expected in 2026. AI is going to make these increases even more. Second, the interest rates are declining, easing the affordability. I think there is multiple interest rate cuts for next year. Third is the PPL. New attractive financing solutions are entering the market to help offset the loss of the 25D. And really the PPL with the loan could help there to offset the loss of the loan portion of the 25D. These drivers could enable a decent recovery in the second half. That's what we think. That's our view. Then, in addition, we see several Enphase specific revenue drivers. I'm very excited about the progress with the fourth generation battery. 40% of our shipments in Q3 into the US belong to the fourth generation. Installers are just getting their hands on and starting to install the product. And we are qualified now at 39 utilities with the meter collar. The meter collar is indeed a differentiated, install because it reduces the cost of backup significantly. Next one, we are entering the 480 volt commercial market, which we didn't have, with the IQ9 GaN microinverter, which we expect to ship in December, which is a couple of months from now. This is going to further ramp in 26. So that's Enphase specific. Third is the strategic partnerships that we recently announced to capture the battery retrofit opportunity in Netherlands. Fourth, our newest IQ EV chargers, along with a bidirectional EV charger. The bidirectional EV charger alone is a game changer. That is a beautiful way to do vehicle to home, which is backup, whole home backup, and vehicle to grid, which is grid services, with a very simple product, a collar and the charger. The charger has got three of our GaN microinverters in there. It's 11 kilowatt charger. It taps directly into the DC port of the car. We are working with a couple of OEMs there, and we will announce, we'll announce them when we get ready. Then the last one really is the most exciting one, is our fifth generation battery. I can't stop talking about it. Our fourth generation battery uses a 64 ampere hour cell. Our fifth generation battery uses a 100 ampere hour cell. Energy density is 50% higher. It's a very compact form factor. Although each modular unit is a 5 kilowatt hour, there can be 4 5 kilowatt hour batteries, 20 kilowatt hours, which can be stacked one on top of the other. It's got excellent serviceability, which means you never need to remove the entire battery off the wall. You can simply remove the battery at fault, replace either the battery management circuit or the microinverter. You can just simply do a swap. So most important there, the system cost is going to drop a lot because our architecture helps us to reduce the cost significantly. And we are going to pass that cost on to the homeowner while maintaining our gross margin there because the cost is low. Similar, IQ9, for example. IQ9, the first flavor that we are releasing this December is 427 watts. The next one that's coming is 548 watts. That will come in middle of the year. The 427 watt product, we are able to achieve the same dollar cost structure for 10% more wattage. So therefore, we expect to drive those costs continuously down. And also, the more power for the microinverter, we do get more PTC. So those all are going in the right direction. So there is a lot of Enphase specific drivers. There are the three general market drivers. The combination, we see revenues growing in the back half.
Excellent, guys. Quick follow-up there, if I can, just that response to the earlier comment. Just with respect to the battery in the Netherlands, can you comment a little bit around what the total opportunity is? Like, how would you quantify the 475,000 households and the potential for battery retrofit? Like, how would you begin to quantify that for 26, 27 in terms of the rate of adoption there? I'm
not going to quantify it right now, but I will tell you a way to think about it. It's 475,000 homes. If each of them were to get let us say, 7.5 kilowatt hour battery, we are talking about 3 gigawatt hours, I think. And then if you say there is only a 10% attach of that, you can do the math. And so it's significant. And what we need to do is to make that 10% happen through strong partnerships. And that's not a done deal. It's not easy to do. 10% take rate is tough to do because customers have their own way of deciding what is good for them. What we need to do is these VPP partnerships. One of the big drivers of demand there is a utility like the partnership that we announced, Ascent, paying consumers for their battery. Paying consumers up to 122 euros a month for a battery, which is 20 kilowatt hour battery. I think that's a big deal. Programs like that can significantly reduce the payback, but they need to be with other utilities too. This is one utility. It is the largest utility, but it needs to be with the others too. So, a lot more things coming there, but we are excited by this opportunity. It's a tremendous opportunity for us.
Thank you, guys.
Once again, if you would like to ask a question, please press star and then 1 using a touch-tone telephone. To withdraw your questions, you may press star and 2. Our next question comes from Maheep Mandloi from Mizuho. Please go ahead with your question.
Hi, this is David Benjamin on for Maheep. Thanks for taking our question. I know we talked about Europe. Can you talk a little bit about the international markets outside, specifically? In the past, there's some enthusiasm about Japan. Where does that stand today? Is there still a strong outlook there?
Yeah, we introduced a product into Japan in April. That's when we introduced the product. We are very excited by that market. What is the driver there? Tokyo. Tokyo has got a mandate that all new construction needs to have solar. And what's unique about Tokyo is small roofs of the order of 2 to 3 kilowatts, irregular sizes, shading, and therefore microinverter is really a beautiful opportunity there. It is the best product for the Tokyo rules. In fact, Japan has recognized that, and we do, the homeowner gets an incentive for the microinverters, which is I think almost 13 cents a watt, if I remember. So it's a big incentive. But all of you know that the Japanese market is slow to react. We have a great partner. Our partner is Itochu, and we are working now. We are working with that partner to train a lot of installers. We are in the training phase. We are meeting with several of them. We have established an entity in Japan. We will have a big office there. We will have approximately 10 plus people in Japan by early next year. So we are making all of the necessary investments there. We are making further a couple of more new products for Japan in order to do sunlight backup, which is a feature that they would like to do. So a lot more to come. The revenue growth will be slow and steady there. Don't expect any hockey stick. Similarly, in Australia, Australia is actually a great story. And from July, there is a rebate from the government. It's very similar. It's not a tax credit, but it's a rebate. But it's similar to the 30% amount that we are used to in the U.S. So that significantly reduces the cost of batteries. That is causing people to buy a lot more batteries than what they would. The attach rate in Australia has gone from approximately 10 to 20% to 80 to 90%. And we are starting to see that in both our sell-through data, activations data. How are we reacting there? We are introducing, or we just introduced the flex phase battery, which can do three-phase backup, which is required in Australia. Flex phase battery also has got the ability to adjust the power according to DSO requirements. Many of them originally felt the power of our battery was too high for Australia. That is a 5 kilowatt hour battery has got 3.84 kilowatts of power, and that scales. So we now have options that can help them scale the power all the way, even to half of that amount. And that is taken care of during commissioning of the battery for the newest three-phase battery. So we have introduced that new product in Q3. We are ramping up on that. Our teams are very excited. They are, in fact, right now at a trade show in Australia. In addition to that, we introduced our IQ8P product, which is IQ8P is a 480 watt AC. As the panels start to become more than 500 watts, our 384 watts AC products is no longer enough. Therefore, we introduced a 480 watts AC, and that's been received very well. We introduced our latest IQ EV chargers there, and now we are planning to introduce hot water heater capability. So they have the entire ecosystem. It's one system. It can be Enphase Solar, it can be Enphase battery, Enphase EV chargers, hot water capability. It's a complete system. So we are very excited. We hope to make a dent there shortly.
Thanks very much. And then I know there's also a lot of enthusiasm around balcony solar. Are you still continuing to see that growth in that product?
Yeah, balcony solar, we just introduced the product. We've had some hiccups in balcony solar, and we resolved all of them. We are ready to ramp again. We are going to be introducing several variants of that product, more focused towards the end consumer. B2C is an area where we need to learn a little bit more, and we are doing exactly that. We are launching an e-commerce team. We are doing aggressive things there. We hope to ramp on that throughout 2026.
Thanks very much.
And our next question comes from Vikram Bagri from Citi. Please go ahead with your question.
Good evening, everyone. Badri, I wanted to understand the framework to think about 2026 revenues or outlook. historically or previously, you've mentioned that installs in the U.S. may be down 20% year-on-year. But when I look at the inventory reduction in third quarter, circa $45 million, and potentially more inventory reduction in first quarter of next year, it seems like you're preparing for a 30%, 25 to 30% decline in installs from an inventory reduction standpoint. Is that, one, my understanding of inventory reduction right? Two, do you know more about the outlook today than you did before? That's why the inventory reduction is so high, or there is conservatism in that inventory reduction? And then finally, is it a function of new product launches, so you're clearing the channel? I'm trying to compare what you've said historically about decline in U.S. residential installs year-on-year versus the magnitude of the reduction you're looking for in the channel inventory. Thank you.
Right. If anybody tells you that they know what is going to happen in Q1, they're wrong. You know that. It's not many people know. But what we gave you a preliminary view of our number, $250 million. However, you should think about historically Q1 has been down. Even for a normal, let's say there is no 25D happening, Q1 is historically down by 15% as compared to the prior quarter Q4. This time, there is additional pressure from 25D. So the industry as a whole expects anywhere between 20 and 30% reduction in the overall market. And that those are range numbers because different folks believe different things. But the reduction comes from one thing. The reduction comes from the fact that the cash and the loan market are the ones to see that decline. Because for them, the 25D 30% tax credit is going away. That is why financing structures, financing solutions like the prepaid lease with a loan can alter that trajectory, can alter that assumption. So right now, we are assuming that Q1 will be stressed, but the numbers we have seen on the prepaid lease with the loan make us believe that a portion of the loan market, which was thought to be gone, has got a good chance to come back.
Got it. Thank you.
And ladies and gentlemen, with that, we'll be concluding today's question and answer session. I'd like to turn the floor back over to Badri Kothandaraman for any closing remarks.
Thank you for joining us today and for your continued support of Enphase. We look forward to speaking with you again next quarter. Bye.
And ladies and gentlemen, the conference has now concluded. We do thank you for attending today's presentation. You may now disconnect your lines.
Wow. Interesting guidance. Interesting numbers, very interesting numbers, very good beat in pretty much all metrics. Interesting guidance as well. It's a bit mild. Let me just mute it. I'm hearing classic music. Yeah. To me, it's just, I can't help it. It's just a buy. It's for long term, obviously. Don't get me wrong. It's not for a short term trade. This can probably continue to the $30 mark if we have some macro headwinds and if the market doesn't digest the market doesn't digest the guidance very well, we can go all the way to the $30 mark. And once we break through the $30 mark, we are looking at completely new levels. But I wouldn't. Yeah, it looks all good to me. It's just great numbers. You could hear the numbers, you could see them on the screen. You were with me before. Yeah, let me know what you think. Do you think it's a buy, hold, sell, or are you undecided? And we also have been running a poll. So let me bring this up. You've got 5 more seconds to take part in the poll in the live chat. So you got 5, 4, 3, 2, 1. Boom! The poll is over. So let's have a look. What do you think? Buy 51%, undecided 19%, hold 18%, and sell 12%. 204 voters. That's a very good specimen. Let's have a look at the questions you have. But before you go anywhere, tomorrow, big day tomorrow. We have a lot on. Tomorrow. In the morning, Boeing, Caterpillar, Verizon Communication, and more. We have GE, Healthcare Technologies. We have Etsy. Have a look if you can see anything. Let me just zoom in a bit for you. Oh, that's too much. Yeah, I'll have to keep it like this. But after hours, we are still undecided. Well, we are decided, but if somebody, nothing is booked yet. So if you want there'll be surprise for tomorrow. But if you want to cover one of these companies for aircraft flying overhead, big heavy cargo aircraft, that will probably be A400. That's probably A400 flying overhead from RAF Mildenhall. So if you are undecided, or if you don't want to get surprised and you want to lock in your company you want us to cover tomorrow, we've got Microsoft, we got Meta, we've got Google, we've got Starbucks. What else was there? There was one more tomorrow. And then for Thursday in the morning, we have Shell. I know we have a lot of Shell investors as well. We have Eli Lilly, we have MasterCard, Roblox, if somebody is brave enough to invest in Roblox. Got a bit more. And then in the afternoon, again, you'll be surprised. But if you want to lock in, and if you don't want to lose your chance, if you want to lock in your earnings, that's Amazon, Thursday, Apple, Coinbase, MicroStrategy, Reddit, and more. So it costs it's a tenner super chat, but if you lock yourself in, you have only one. You probably have last chance now, because otherwise somebody else can jump in, or we will broadcast a surprise event for you. We might not be doing. Look, tomorrow I might not be doing Microsoft, Meta, or Google, or Starbucks, or any of them. I will open this list, and I might go to the very bottom of it, and I will pick. There we go. Thank you, Jenny. You are locked in with Microsoft, so that will be probably me. Let's see if Sensei will be joining. I'll be speaking with Sensei. We might be running parallel, but definitely, Jenny, thank you and congratulations. You've locked in your Microsoft earnings. So that will be Microsoft tomorrow after hours. I don't have to pick the least popular stock anymore. That's great. So tomorrow, same time, same place, I'll be joining. You will be joining me. I'll be hosting Microsoft earnings call. Thank you very much, Jenny, again. So let's have a look at the chat. Did we have any questions? Did we have any reaction? Whoa, wrong scroll. Right, did we have any reaction? So we've got James has joined us. Thank you very much for joining. He's struggling with the winter clock. Yeah, everyone is struggling. James, I'll tell you one thing. I finish at work. I've got slightly longer hours. I work 9 to 11 hours a day eventually, and I want to be doing these live updates every day on eVTOLs. Plus, I've got earnings after hours, and sometimes I just want to do something around the closing bell. Before the clock change, I was sort of all right. I had about between 30 and 90 minutes to get ready for the live eVTOL update. Now, since everything is 1 hour ahead, I have zero time, and I'm struggling so much. But yeah, it's only 1 week, and then we are shifting back to the same offset, back to the same 6 hour difference. So we should be in better position. Everything should settle back in. So thank you for joining, James, and hit the like button. Yeah, thanks for the support. Move the product. Solar is the future. I agree. Cedar Trees says big buy wall at $33. Added some limit orders at $33.25. Have they gone through? Have they been filled? I don't think they have. Oh, they may have. Cedar, have you got any? Have you acquired any Enphase? Let me know. Let me know in the chat. I'm intrigued. If your orders have been triggered. Cherokee Shore. Am I saying that right? Why it's down? It's probably the weak guidance and still the current administration and the climate around. Climate is a good word. Yeah. The sentiment around renewable energy. Zach Zaid is here. Thank you for joining. Q1 was a dump. Cedar says, thanks, Vaz. You are welcome. Thank you, everyone, for joining me. We had a great audience. We were holding great numbers. I see we have a lot of smart investors as well. Because investing is not only about what other people say and what people on Reddit and X say. Investing, this is pure investing. Going through the earnings, listening to the earnings call and reports, going through filings. That's great. Congratulations, everyone who joined today. You are officially a smart investor. Michael Anthony says DJT has had great news today that can sell and buy Bitcoin and digital assets. I tell you what, Michael Anthony, tomorrow, if you join Sensei in the morning, he's our crypto expert, and he can have a look. He can have a look at the relations, and he can have a look at the chart for you. Zach says, thank you, Vaz. Well, no, thank you for joining me. Thank you, everyone, for joining me. None05550. Thanks, Martyn, for the live stream. That's not Martyn. Martyn is on holiday. I'm Vaz. I'm one of the broadcasters. Martyn, Sensei, you will see him tomorrow morning. And me, Vaz. I focus on advanced air mobility, eVTOLs, flying taxis, something like this. This is my discipline, but I also cover tech, defense, aerospace, and I also cover earning calls as well. So that's me, Vaz. Well, thank you for joining. None05550. Is that your civil name? Michael Anthony says, why all this selling in the past? Again, Trump administration not in favor of renewable resources, just not the best climate, if you pardon the pun. Jamie Rees doesn't sound like an eVTOL. No, it doesn't. But I'm here to be here for you. So before Martyn is back from holiday, I need to pounce as much airtime as I can, because when Martyn is back, Martyn will be doing these earnings. I mean, Enphase, that's his stock, isn't it? It's his favorite stock. So yeah, I'll be more than privileged to leave this to Martyn. None05550. First time hopped on to your live stream, Martyn Lucas Investors. So much buzz around BMNR. Goodbye for swing. BMNR. Well, let's have a look. What I would recommend to you, you can join Sensei tomorrow morning, couple of hours before the market open. And he will do full chart analysis for you. Let me have a look at this. BMNR. BMNR is Bitmine. Is that correct? Bitmine. BMNR. Bitmine. Yeah, that's definitely Sensei. I tell you what, join Sensei tomorrow morning and ask him, and he will do the chart for you. If you are subscribed, and if you want to become a member, you will have a lot of membership benefits. But if you join Sensei tomorrow, he can talk about it. It's 2 hours before the market open. Cedar says, is earning spot available 10th of November? Well, let's have a look. 10th of November. We've got, that's next week. We've got Archer, Joby, Vertical. They are locked in. We have Virgin Galactic on the 6th as well. 10th of November. I see where you're coming from. No, it's, did you say after hours? Yeah. Fill your boots, Cedar Tree. We've got ASTS Space Mobile. We have Rocket Lab. We have CoreWeave. And we should have Redwire as well. Oh yeah, there it is. There it is down the bottom. We've got Redwire as well. So I think you are onto something, and I think I know what. So 10th of November after hours. Nothing is booked yet, but a lot of interesting space stocks as well. So fill your boots if you want to lock any earnings in. Feel free.
For the third quarter.
Oh, sorry, I'm hearing something, and the earnings is replaying now. I didn't close the window. Michael Anthony, did you look at any earnings today in after hours? Today? We just did one. We just did Enphase. Did you look at any earnings today after hours? Oh, we've got Cedar Tree with hang on. I've got. Can you see the fireworks? Okay, I've got. Oh, it's in the bottom. Look, that's a new feature. I've got a new feature. It's working. I just need to move it. So the same way as you can see on Sensei's and Martyn's screen, I've got it down there. I made it work. That's great. That's great. Does anybody else want to try it? Do you want to do $5 super chat and put your message so we try it? No, congratulations, Cedar Tree. You've got Givo, whatever. I know this company. That is renewable aircraft fuel. Renewable aircraft fuel. There was a lot of interest a couple of months ago because some of the senators were allegedly manipulating, well, not manipulating, but sort of inside buying. So yeah, I will put it down. Martyn says, "Don't go stealing my earnings slots. I'll be back soon." Yeah, you are locked in. Cedar Trees, congratulations. You got my like. And Jenny is locked in for tomorrow for Microsoft. Michael Anthony, yeah, so what was your question? Did you look at any earning today in after hours? I didn't check any numbers. I was quite intrigued about the EA Sports. Electronic Arts. I was quite interested in that. Visa is still going. No, I haven't had a look yet. Cedar Tree says 3250 buy was triggered. Congratulations. And what's going on? Oh, there's something else. I thought we had a movement on Enphase, but we don't. It's still flat. Let's see tomorrow. It'll be very interesting to see the whole market tomorrow and how Enphase is going to react. We are flat-ish. Gold and silver is down. Crypto is going down as well. S&P and Nasdaq holding flat. Very interesting. Let's see tomorrow. Any more questions? Jenny says, great coverage. I am sure Enphase will go up over the next few days, weeks. I believe Martyn says it will go to 100 by end of year. That would be nice. Good evening, Lucas Aids. I agree, Jenny. That's one of the best beats and numbers I've seen on the earnings I've covered myself. The numbers were amazing. So yeah, I agree. Michael, none05550 says, thank you, Vaz. You are welcome. Martyn says, don't go stealing my earnings slots. I'll be back soon. And Cedar says, correct. Plus CCS carbon capture, sorry, I can't pronounce the word. I don't even know what that means. Sequestration. Let's have a look what that means. Sequestration. Let me close this earnings call because I can still hear it. Where are we? Let's close it. Right. Sequestration. Saying it right?
Sequestration.
Okay. You are right, Vaz. The action of... What is a sequestration? Sequestration is an act of sequestrating. Thank you, Google. And what is sequestrating? Well, it's a product of sequestration. The action of sequestrating or taking legal possession of assets. The action of chemically sequestering substance. Okay, I think I might know that in Czech. It's very out of date word, by the way. Yeah, it's a bit of a relic, language relic. It's got a bit of Renaissance around the 70s and towards here, but the main boom, this word, experienced around 1830s. Yeah, that was a top trending word. That was the young generation talking. Yeah, using sequestration. I think I understand what is meaning removal or separation, banishment of exile, a withdrawal into seclusion, retirement. I think I know what that is in Czech. Yeah, that's the legal process. Right, yeah. I will have a look, but I will find a video for myself just to make sure I understand it, but I think I know what's going on. The ethanol and sustainable aviation fuel, you just explained, SAF, will be a net zero plant in the upcoming future. They are already storing CO2 in the ground. Yeah, very interesting. Very interesting. What is, well, let's have a look at Gevo. What is the stock price doing? Yeah, it's still in the lower levels. I bought it like a few months ago when there was the boom with the senators buying it. I bought it for a nice trade, but it's been a penny stock. It's been a proper penny stock. Yeah, I think I bought it here, somewhere around here. Few shares, or maybe here. I don't remember now. But yeah, well, we've got a nice uptrend in there. And aviation, yeah, substantial aviation fuel. It will be very trending word in the coming years. So interesting. I'll have a look. See, this says carbon capture and sequestration involves capturing carbon dioxide from sources like power plants and industrial facilities, transporting it and storing in deep underground and geologic forms. I owe you the chart. I didn't show you the chart because I didn't switch the scenes. So yeah, I bought it, I think, somewhere here or here on the way up. Typically, as you shouldn't be buying it on the way up. And then I had my money locked in it for ages, and it's just a proper penny stock now. But we can see this nice upside from since August. So I can see some potential in it. Yeah, earnings on the 10th. You've got it locked in. See there. They also had net positive revenue since going public. Very interesting. Well, I might have a look and see if I can invest myself. Sitting at 1.31 average. Your position, 1.31 average. Congratulations. Right, it's time to wrap it up. Tomorrow morning, big day. Sensei in the morning. I think there will be a shorter show, because he's got big event. He's got probably the biggest event of the year so far. He's got the rate cuts, Fed's rate cuts. FOMC report. Is it gonna be good? Is it gonna be bad? Well, if you stay where you are, it will redirect it right to the event. You can book your seat. In there. If you click the notification bell, and if you hit the like button, as soon as Sensei goes live tomorrow, it will send you a notification. So that's Sensei. After that, or around that, I will try to go out live with the Joby update with the NVIDIA partnership. I'll try to do something. If not, you will see me on the Microsoft earnings for Jenny. Thank you very much for locking that in. That's it from me. I think it's time to go to bed. For me, definitely, I need to catch up with my personal life. Tomorrow will be big day. Thursday will be big day. Yeah, at least for me. Thank you very much for joining me. I see we had a lot of smart investors learning about the company, about Enphase. Maybe a few fans of me as well, who were not interested in Enphase, but were watching because of me. Anyway, tomorrow, same time, same place, Microsoft, and don't forget, Sensei, probably the biggest event of the year so far. That's it for now. Take care of yourselves and each other.